Good morning, everyone, and welcome to this webinar on the future of EU sustainability reporting, where we'll be diving into the direction of travel in Europe to strengthen sustainability reporting across the Union and talk about some of the factors that are essential to ensure its successful implementation. We are very happy that you are joining us, and I can see people are joining slowly, so I will just wait a few seconds to make sure that everyone who has been waiting is allowed into the room. So if that's all right with you, we'll just wait 30 more seconds just to make sure that people can join and we can kick off the discussion. Welcome, everyone. For those of you who are just joining, we are just giving everyone a few minutes to log on to the webinar. Wonderful. Well, people are still joining us, but maybe we can kick off the webinar, and as we go through the introduction, we can have the rest of the audience join us. And welcome also to those of you joining us from other social media, LinkedIn Live, YouTube, and Twitter. So once again, welcome to this webinar where we'll be discussing the future of sustainability reporting in Europe, focusing on policy and the success factors we need to make sure that the implementation and the evolution of sustainability reporting is a successful one. Just to introduce you to us very quickly to CDSB. CDSB is a board member organization set up to provide decision-useful environmental information to primarily capital markets audience via the mainstream corporate report, that is the annual report of businesses. We work to help companies with integrating information on environmental matters and soon sustainability matters into their annual reports, building on existing standards and using existing standards such as CDP, who is actually one of our speakers today as well. So we're very happy to be having this discussion and hosting this discussion. Really, what we wanted to do today is to invite a few key players in this space who are shaping the agenda across Europe of sustainability reporting, and see where we are, see what the challenges are, see what the direction of travel is, and see where there might be some more areas of further work to take on as well. And so I'm very happy to have a wonderful panel today. But before we kick off, we have a video message from Pascal Durand from the European Parliament, an MEP who is a crucial actor in this space, and he has very graciously provided some remarks. He is a key actor here, and those of you who know CDSB, might see that we might not see eye to eye on all points, and you might see that from his remarks. But I think we really are grateful for his remarks, and we're very happy to be having an open discussion around this area as well. So thank you very much to Monsieur Durand from his video remarks. So with that, over to you, Monsieur Durand. Please excuse us. I think the audio wasn't working on this, so we'll might give it another go. But if it doesn't work, we can also jump into the panel and have Monsieur Durand present his remarks towards the end of the presentation. But let's give it another go. Let's see if it works this time.
Bonjour, je tiens tout d'abord
Great.
à remercier le Climate Disclosure Standard Board pour son invitation à ce cycle de conférences sur la communication sur les données de durabilité. Alors, les organisateurs, pour éviter toute surprise, ont pris soin d'encadrer mon intervention. Je vais donc m'en tenir à leur feuille de route qui tient en 3 points. L'état des lieux sur la proposition dite CSRD, qui est une révision de la directive existante sur le Non-Financial Reporting, la NFRD. Depuis 2014, les grandes entreprises européennes sont soumises à une obligation de publier des données sur la durabilité, c'est-à-dire essentiellement environnementale. Dans les faits, cette communication fonctionne très mal, et c'est un euphémisme, car les référentiels sont facultatifs, la communication de l'information est trop sélective, voire totalement arbitraire, quand elle existe. Le nombre d'entreprises, environ 10 000, apparaît trop limité. C'est pour ces raisons que la Commission a notamment proposé d'élargir le nombre d'opérateurs économiques couverts par une obligation de dire, mais aussi d'améliorer la qualité et la quantité de l'information publiée. Des 11 000 entreprises concernées aujourd'hui, environ 50 000 grandes entreprises et entités cotées devraient être couvertes par le champ de la directive. Pour les cotées, c'est d'ailleurs intéressant d'observer que la taille va être indifférente. Les informations ainsi communiquées devront concerner l'ensemble de la chaîne de valeur sur des aspects aussi importants que leur action vis-à-vis du changement climatique et du respect de l'environnement, de l'impact de leurs activités sur les populations locales, les enjeux sociaux et la gouvernance d'entreprises tels que l'égalité femmes-hommes au travail par exemple. Alors que plus de 1700 types de reporting RSE existent aujourd'hui en Europe, l'ambition de cette révision est d'établir un référentiel commun pour l'accès au financement et des indicateurs identiques utilisés par toutes les entreprises. Cette mission a été confiée à l'EFRAG et doit déboucher sur la formulation de standards européens qui devront être adoptés conjointement par le Parlement et le Conseil sur proposition de la Commission par voie d'actes délégués. En second lieu, l'importance donc d'adopter une approche qui ne soit pas exclusivement centrée sur la lutte contre le changement climatique. Bien que fondamentale, l'approche transversale de la CSRD ne peut se limiter à la lutte contre le changement climatique. Il est évident que les enjeux environnementaux sont profondément liés aux aspects sociaux et aux droits humains. C'est pourquoi le législateur européen souhaite désormais intégrer les 17 objectifs de développement durable de l'ONU dans le corpus réglementaire de l'Union. Les 3 piliers de la CSRD, l'environnement, le social et la gouvernance, contribuent à cet effort par le biais de l'action des entreprises et de leurs investisseurs. Le Parlement sera particulièrement vigilant dans le processus d'élaboration et de suivi des standards par la Commission pour assurer une cohérence entre les piliers du reporting afin de couvrir les interconnexions entre la protection de l'environnement, des droits sociaux et des droits humains. Les facteurs de succès, en troisième lieu, de cette révision tiennent avant tout à la convergence de cette demande de régulation européenne par l'ensemble des acteurs, que ce soit les investisseurs, les dirigeants, les syndicats et les ONG, car cette convergence est absolument majeure parce qu'elle va permettre de mobiliser la société dans son ensemble. Ensuite, la cohérence des agendas entre les différents textes législatifs tels que ceux découlant de la taxonomie, c'est-à-dire la définition des investissements verts, est également un élément qui me paraît très important pour le succès et surtout l'efficacité future de cette révision. Il n'est évidemment jamais aisé de prédire la réussite du parcours d'un texte législatif. Néanmoins, je suis convaincu que des avancées rapides peuvent être obtenues malgré les résistances traditionnelles habituelles. Plusieurs visions s'opposent sur ce que doit être la performance extra-financière d'une entreprise. L'Union européenne n'est pas la seule puissance engagée dans la mesure de cette performance et les États-Unis sont eux aussi, après s'être totalement désintéressés de la question, en train de concevoir leurs propres indicateurs. Et si ceci devait s'imposer et devenir la norme internationale, eh bien le développement durable serait défini très largement par la vision américaine, qui est essentiellement adossée à une vision financière du monde. Et celle-ci s'appliquerait également aux normes d'audit et de contrôle que l'on sait aujourd'hui quasiment monopolisées par un nombre très restreint d'acteurs pour la grande majorité des Américains. Donc pour arriver rapidement à définir des normes européennes, puis je l'espère derrière internationales, nous prévoyons de finaliser le rapport en commission jury début mars et de débuter les trilogues, c'est-à-dire les dialogues avec le Conseil et la Commission, fin mars, début avril. bien entendu si le texte est adopté préalablement au Parlement. Je fais confiance aux présidences slovènes et françaises pour mener en parallèle les discussions au sein du Conseil dans un calendrier restreint. Pour conclure et évoquer rapidement le fond de cette directive et les grandes lignes que je défendrai au Parlement en espérant qu'une majorité de parlementaires voudra bien s'y adosser. 1. L'élargissement du champ d'application de la directive, on l'a dit, passer des 11 000 actuels à plus de 50 000 et inclure la totalité des entreprises cotées et certains secteurs à risque à définir. L'inclusion dans un rapport de gestion unique des informations financières et de durabilité qui soient diffusables en format numérique, c'est une évidence pour que tout le monde puisse l'analyser et l'observer, notamment les ONG. L'application du principe de double matérialité. Derrière ce mot se cache une réalité assez simple, c'est-à-dire d'une part regarder les impacts sur l'entreprise des externalités et dans un deuxième temps, ou en parallèle, regarder également les impacts de l'entreprise sur l'aggravation ou l'atténuation sur son environnement, sur son milieu, comme un élément structurant de la performance des entreprises. Et c'est là une différence fondamentale avec les États-Unis. Une communication des informations sur toute la chaîne de valeur, l'ouverture du marché de l'audit de durabilité à des organismes tiers indépendants, autres que les seuls contrôleurs légaux des comptes ou les cabinets d'audit. Je suis convaincu qu'une mise en œuvre ambitieuse du reporting sur l'information extra-financière permettra aux grandes entreprises cotées et non européennes, mais opérant en Europe, d'être à l'avant-garde d'un nouveau modèle économique qui soit à la hauteur des enjeux humains, sociaux et environnementaux du XXIe siècle. C'est en ce sens que je publierai dans les semaines qui viennent mon projet de rapport du Parlement sur cette révision. Je vous souhaite une excellente conférence.
Thank you very much, Mr. Durand. And I think his remarks are very timely, given that discussions are taking place in Parliament as we speak, deliberating the directives words. And while there are, of course, diverging views about how the specifics, I think we all can agree that we need to move faster. And so this is a very exciting time. And so with this in mind, we have an excellent panel of experts joining us today, and I will introduce them as they appear and then they provide their opening remarks. First, we have Miriam Wolfram, who is Director of Policy Engagement Europe at CDP Europe. I'm sure CDP doesn't need much introduction. Hopefully all of you are aware of the organization. And Miriam is also participating as in the project task force on the and I have to make sure I get this right, on the reporting of non-financial risks and opportunities and linkage to the business model hosted by EFRAG. That is a really crucial work stream within the EFRAG European Reporting Lab to enhance disclosures on sustainability matters across Europe. And Miriam, it would be wonderful to hear a little bit about the work of this project task force, but also the work that CDP is doing to advance high quality disclosures across Europe on climate and other matters as well. So with that in mind, over to Miriam, the floor is yours.
Thank you very much, Mike, and hello everyone. I brought a couple of slides to make it a little bit more visual, and I can see them, and I hope you can see them as well. So thanks for having me. My name is Miriam Wolfram. I'm Director Policy Engagement at CDP Europe. And I will talk a little bit about sort of the state of and the best practice of corporate disclosure. So for those who do not know CDP, CDP is a not-for-profit charity, and we run the global disclosure system for investors, companies, cities, and regions to manage their environmental impacts. And the questionnaires that are sent to these stakeholders reflect double materiality and are aligned with the TCFD. I'm pointing this out because it will be helping you to basically interpret the numbers that we going to have a look into on the following slides. So this means that companies disclose on key elements similar to what has been requested under the NFRD, under the Non-Financial Reporting Directive, now the CSRD proposal, such as strategy and business model, risks and opportunities, targets, actions, performance measures, and notably their plans on how to align with latest environmental science, such as the 1.5 degree goal. And on the next slide, which is we can go to the next slide, please. Thanks. Which is very packed, and apologies for that. But this is a graph. This graph is a screenshot from an interactive data dashboard that we provide to policymakers as part of the CDP Government Partnerships Program. And while corporate sustainability information is, of course, absolutely key for capital markets in order to shift the trillions, as we like to say, it's equally needed by policymakers to track progress against the European Green Deal goals and the Paris Agreement. Disclosure in climate change, water and forest have been growing during the last years. The overall numbers of disclosures grew by 35% in 2021 and over 140% since 2015, when we had the Paris Agreement really as a landmark sign and signal to the market. And let's look at the part in the yellow circle for water and forest disclosure numbers, which I have been asked to point out a little bit. Between 2012 and 2020, we steadily see increasing numbers of companies which responded to the request backed by investors. For example, in the reporting year 2019 to 20, CDP saw an increase of disclosures by 21%, and from 2020 to 2021, a further increase of 25%. So this is very positive, and it shows that water and forests reporting is on track to become mainstream, and that the market there is market readiness for the reporting rules set out by the CSRD and the complementary EU sustainability reporting standards. We can go to the next slide, where I would like to dive a little quickly into an area of utmost importance when it comes to corporate reporting, and this is global supply chains. Global supply chains are key, as we know, and often the biggest impact sits in scope 3. This can be emissions, purely scope 3 GHG emissions, but also other environmental and social impacts often materialize in global supply chains. So positively, also here we see an upwards trend of more and more companies reporting to their clients, so the purchasing departments of large corporates, basically. Reporting throughout entire supply chains is also really key for data quality, since, to give you an example, for scope 3, GHG emissions data will still partly rely on modeling due to the lack of primary data. So what's the path to improvement? On the next slide, I'd like to point to the report of the project task force on reporting of non-financial risks and opportunities and linkage to the business model, which was part of under the European lab at EFRAG, of which I was a member, and this report has been recently published. The report is meant to aid preparers and entails a lot of really interesting findings and case studies, which I highly recommend having a look. It's way too much information to go into a lot of detail here, but based on the key findings, it is the view of the task force that there is a considerable scope for improving the quality and usefulness of reporting on sustainability risks and opportunities and the linkage to the business model. So you can see the report finds the need for a clearer description of the business model and the linkage to the risks and opportunities section. More emphasis on reporting opportunities. So this is really we see a lot of risk reporting, but in order to really see the value creation from actually climate and environmental matters and social, the opportunities reporting is equally key. Quantification of risks and opportunities and cash flow generation can be improved. Better connectivity of financial and sustainability information, application of evidence-based and science-based targets. This relates right back to the 1.5 and environmental science-based goals and targets, optimizing the use of available technologies, and finally attaining credibility through third-party assurance. And I'd like to just conclude with two thoughts, and I'm happy to then take those into the further discussion after my fellow speakers presented their introductions. So meaningful disclosure is really key. It must give capital markets, policymakers, other stakeholders, and not least corporates themselves, decision useful data that enables corporate progress against temperature targets and planetary boundaries to be tracked. EU-headquartered corporates can and need to drive the global transparency and action. In a global economy with global supply chains, the highest standards, such as in the EU in many cases, become the de facto global standard. And with this, I'd like to thank you and hand back over to Mike.
Thank you very much, Miriam, for these very insightful thoughts and presenting some of the work that both CDP and the NFRD Project Task Force has conducted, and some very inspiring words of conclusion as well. Before I ask you a question, I also wanted to highlight that please do send us questions in the chat. If you are joining us from one of our social media channels, we should be able to get your questions from there as well. So if there's a chat, please do use it as well, and I'll keep an eye on them and ask our panelists when we get to the discussion. And there were questions about slides. We will just double check with our panelists who are using slides whether we are able to share them, and if we are, then we will of course include them in the follow-up. So if we can, we'll of course do so. So Miriam, you've covered quite a range of topics, and what my interest is in this discussion, I think what's the key theme of the current developments in Europe is sort of going further, going into to more detailed and sort of improving the foundation that the previous non-financial reporting directive has laid. And one area that is, I think, very interesting is with COP negotiations coming next week, climate has reached a lot of attention over the years. Do you see also maybe through the work of CDP as well? Do you see other areas in this space of sustainability reporting evolving as well?
Absolutely, and you're right. We have I guess a large common sense on the climate urgency, and it's also like an area like literally emissions is an area where we have very advanced market readiness, very advanced methods, commonly agreed methodologies. It's a global issue. It's literally, it doesn't matter where the ton of metric ton of emissions is emitted. In other areas, we know from science that the urgency is, if not like more severe, looking at the loss of biodiversity. On the other hand, we face a little bit the challenge that we don't yet have these fully sort of agreed and developed methodologies and metrics, but is indeed absolutely key. It's also part of, since you mentioned that, part of CDP's 5 years strategy to really move into the other environmental areas such as biodiversity, nature, oceans. We also will be part of developing, as CDP usually does, sort of methodologies and metrics to fill the gaps, such as we are currently doing for water metrics for the financial sector that will be included in the next year's questionnaires for financial services companies. And indeed, I think the name of the game is, and this is also something that, if I may, it would have been absolutely brilliant to see in the level 1 CSRD proposal text. We have that sentence on companies shall disclose their plans on how they're going to transition and align with the 1.5, let's say the latest climate science from IPCC. And in addition to this, it would have been brilliant to see and how they align with our nature positivity by 2050 goal, because we know from science that the biodiversity crisis is just literally on our doorstep, and we need the disclosures to follow.
Thank you very much, Miriam. I see some excellent questions coming in, which I will leave to the panel discussion, but please do keep sending them as we go along. I am keeping an eye on them. Next, we have Piotr Biernacki as our next speaker, who is the president of the Foundation for Reporting Standards. Many of you will also know Piotr from his many roles. Amongst them is his membership of the European Lab Project Task Force on the preparatory work for the elaboration of the possible EU non-financial reporting standards as well. So Piotr, with your many hats, I really wanted to sort of ask you to introduce some of the work of this Project Task Force, and sort of also sort of, please provide any of your thoughts on these developments in this space. Over to you.
Yes, thank you very much, Mike. Good morning, everyone. Thank you, Mike, for inviting me to this webinar. It is precisely, in my opinion, a great time to discuss the current developments in sustainability reporting, because in fact there is a lot going on. And to go directly to the point, what we do at the project task force, the so-called PTF ESRS. ESRS is the abbreviation of this long name of the project task force, is we are drafting the future European sustainability reporting standards. When the Commission decided to move on with revision of the NFRD and started working on what later was published as the draft CSRD, the Commission asked EFRAG to set up a project task force to prepare a report on a possible future system of sustainability reporting. And this was done by the project task force from September 2020 to late February 2021. Then, when the CSRD draft was announced, it was clear that the work on future sustainability reporting standards in the EU must be taken on immediately, because the Commission decided that there is no time to wait for the political process to be finished with the work of the Council, of the Parliament, etc., and then start working on the standards. So the task was again given to the same project task force where I'm in, and I'm one of about 35 members of the project task force. But to give you a scope of how huge the work is, there are about 45-50 members of the Secretariat who are high level experts who are helping us with all the work in the project task force on developing the draft standards. Then we have about 10 observers from various EU institutions, and then we have representatives of other standard setters and international organizations such as GRI, for example, who are in a process of co-construction with the project task force. And soon, so this is already about 100 persons, and soon we will be joined by members of about over a dozen expert working groups that will be commenting on the draft standards. The work is organized in 9 clusters. I am co-leading cluster 1, which is supposed to deliver 6 conceptual guidelines and 5 cross-cutting standards. Then we have 5 clusters that are working on topical standards, like climate change, water, circular economy, pollution, biodiversity, then all the people and social topics, and then the governance topics. And then we have 3 additional clusters. One is working on sector standards, one is working on the draft standards for SMEs, which definitely need to be simplified, the ones for the large companies. And the last cluster is working on the format of reporting and the digitalization of reporting. So to give you just one key rule that will be at the very foundation of the reporting standards, it's the rule of, how it is constructed. I mean, the system of standards will be constructed on the rule of 3s. I mean, there will be 3 layers of reporting, 3 areas of reporting, and then 3 topics of reporting. The 3 topics, it's the simple division is the ESG, environment, social, and governance. And of course, there will be subtopics, sub-subtopics, etc. The 3 areas of reporting will be the strategic area, so something that you will report for the whole undertaking in the company or the capital group. So this is the business model, the strategy, impacts, risks, opportunities, how they are identified, assessed as material, and etc., and the governance of sustainability related matters within the organization. So this is the strategy area. Then we have implementation area, where we would have reporting on policies, targets, action plans, and resources. And of course, this will be per topic. I mean, what is the, I don't know, climate policy? What are the targets there? What are the action plans that are set up to achieve those targets? And what are the resources allocated to actually fulfill those action plans? And so this was strategy, implementation, and the third area, performance measurement. These are the real metrics, indicators, where we assess the performance of the company in the past, in the reporting year, in the past years, and give an outlook to the future. How, what have we achieved in comparison to the targets, etc. So we've got 3 topics, 3 areas, and 3 layers. 3 layers. It's the sector agnostic layer. It's the layer where we will have the same indicators for all the companies. So if the standard setter, currently it's the project task force in the role of standard setter, but soon it will be EFRAG, as EFRAG will be reformed and will have the whole sustainability pillar. EFRAG will be the standard setter, and of course the standards will be issued as delegated acts by the Commission in the end. So if the standard setter decides that there is a disclosure requirement that is material for all the companies, then it will be in the sector agnostic layer. Each and every company will have to report on this. Then we will have a sector specific level. So then we will have sets of disclosure requirements for particular sectors, which are material for particular sectors. And then we will have an entity specific layer. If the company performing its own materiality assessment process finds out that there are some sustainability related matters that are material, whether these are impacts or risks or opportunities, but were not captured by the sector agnostic or sector specific layer, then the company will have to report on it too, because each and every company will be required to perform its own materiality assessment study or analysis and report on it. So disclose in the report how it was done, how the company assessed what is material, what is not material. So this is in overall how the process looks like, and I will finish with giving you some dates. Currently, I mean in October is coming to an end, but November, December 2021, the project task force will slowly publish some working papers on the standards. You might have seen the first one published in September on the climate standard. And soon, I hope in November, you will see the next ones. Most probably from January, there will be public consultations or a public outreach. It is still to be decided in what form. And then when the EFRAG reforms come into force, the project task force as a temporary task force will hand over to EFRAG and then EFRAG to the Commission.
Thank you very much, Piotr. That is very useful, and thank you for giving us some specifics around what's coming and also when it is coming. I think it's very useful for the audience. I have one question from the audience. I think it's good to ask you about this, which is around everything else that's going on. The question is, how does the task force's work take into account the SFDR, the RTS, and a taxonomy regulation?
Yes, that is one of the core, let's say, core principles of our work. So the European sustainability reporting standards must be precisely aligned with European legislation, policy objectives, etc. So we had to adapt what we're working on to the legislation that is currently in force, like the taxonomy regulation. So when you see the proposal, the project task force proposal of how the environment topic is divided into subtopics, that follows precisely the 6 environmental objectives from the taxonomy. There is nothing new to design here. It was a bit more difficult with the SFDR, but we have managed somehow to work on this. But anyway, this is one of the core principles that this needs to be aligned, so that in future, for example, the financial institutions that are under the SFDR and will have to report a lot on this will receive the required data through the reports published by the companies under the CSRD.
Thank you very much, Piotr. It's great to hear that it's all part of the process, and the work is trying to also make sure that it takes into account the various policy developments. So with that in mind, over to our last panelist, but certainly not the last, Marie Liager, and I apologize if I pronounce your name incorrectly, Marie, but many of you will know Marie as well. She's a policy officer in the focusing on corporate finance at ESMA, the European Securities and Markets Authority. And we're very happy and lucky to have you. Thank you for joining us, Marie. I think it's really important for us to understand a little bit more about the role of the supervisor in this space, and sort of what it can do to ensure that this process is a success. So over to you, Marie. Would love to hear from you.
Thank you, Michael. So maybe I can just ask, I've prepared a few slides to support my intervention. Maybe I can ask that be put up. Thank you, Julia. Yes, so thank you for inviting me today. I'm very happy to speak here. As Michael said, I work for the European Securities and Markets Authority, ESMA, and I'm speaking in that role today. So I think up until now, we have focused a bit on the rules in this event today. We heard from Monsieur Pascal Durand what the CSRD proposal entails, what the foreseen changes are at level 1 in the legislative proposal. And Piotr just spoke about how the new reporting standards that will most likely come into place at level 2, how they are being developed. So that's a lot about the rules, which is very important. But as Michael said, I would now like to speak a little bit about the enforcement of the rules and the role that that plays. So when I say enforcement, what I mean is the role that national competent authorities in each EU country has to make sure that the reporting rules that are in place, whether it be the current NFRD or the future CSRD, that those rules are being respected and applied correctly by companies. So perhaps I could ask you, Julia, to go to the next slide. Thank you. So let's first look at the role of national competent authorities, or NCAs as we like to call them. So most NCAs have a mandate to supervise the non-financial information. I'll call it NFI from here on, it's quicker. They have a role to supervise NFI, which issuers publish under the NFRD. And the way that NCAs do this is by selecting a sample of the issuers in their jurisdiction that are subject to the NFRD, and then they look at the NFI of that issuer or those issuers that they have selected. And when an NCA finds that an issuer's published NFI does not comply with the rules of the NFRD, the NCA will reach out to the issuer, have a discussion, and take an action to make sure that a correct version of the NFI is published. That's kind of putting it in a very compressed explanation, because of course there will be a lot of back and forth, and this will be a process. In addition to examining this sample of issuers within their jurisdictions, many NCAs also engage in more general interaction with issuers and auditors as well in their market by providing seminars on the rules, for example, by publishing guidance on the rules and so on. So that's the role of NCAs in relation to enforcing these rules that we have on publishing NFI. Now, there are a few factors that make enforcement of NFI challenging for NCAs. There are a few challenges or roadblocks that we can talk about. So firstly, not all NCAs have the power to enforce or to examine NFI in all situations. For example, a small number of NCAs can only enforce NFI if it is published within the management report. Whereas if the issuer has decided to put its NFI in a separate report, which the NFRD makes room for, then some NCAs do not have the mandate to look at that NFI anymore. For other NCAs, they have the limitation that they can only check whether the NFI exists, but they don't have a mandate to actually look, how has the NFI been drawn up? What is in there? You know, they can only look at whether it exists. They don't have a power to look at the content. That is the case for a few NCAs. And again, a few NCAs are not empowered to enforce NFI at all. They don't have the mandate. So for the individual NCAs that are touched by these limitations, that's of course a challenge for them. And they have to stay within the powers that they have been given by their national legislation. Secondly, as we all know, and as has been mentioned already today, the disclosure requirements that are set out in Articles 19A and 29A of the NFRD are quite broad. And so this makes them more challenging to enforce because there is not one clear and commonly understood way to comply with the requirements. Instead, there is some room for interpretation. And furthermore, issuers can, of course, use a variety of different reporting frameworks. So the lack of comparability that may be challenging for investors and other users of NFI is actually also a challenge for NCAs. Next slide, please. So that was a little bit about the role of national competent authorities. If I can then go to talking about ESMA's role. Our main objective is, in relation to enforcement of the NFRD, is to promote supervisory convergence. So supervisory convergence means that the NCAs of the 27 EU countries and also of the 3 EEA countries should apply the rules of the NFRD in the same way. This ensures that issuers are treated in the same way across jurisdictions, which is in line with the single market and which prevents regulatory arbitrage. And it also ensures that users are provided with NFI whose quality has been ensured and checked in the same way across jurisdictions. Now, the way that ESMA promotes supervisory convergence in this area is that we organize discussions among NCAs about how the rules in the NFRD should be applied. We discussed this in various working groups. We also organize discussions with NCAs of concrete cases where an individual NCA will bring an active case, often a concrete case that they have anonymized, possibly. And we discuss, that NCA can discuss with its peers from other countries, what would you do in this situation if you were examining this non-financial statement and you came upon this seeming lack of compliance with the rules? How would you act? And they can give each other their feedback. Now, if we look at, that's the role of ESMA. If we then again look a little bit at the challenges for ESMA to promote supervisory convergence, they're broadly the same actually as those that I mentioned for NCAs. So firstly, the fact that NCAs have varying powers in relation to enforcing the NFRD also makes it more difficult for ESMA to ensure that all NCAs do their work in the same way. Because there are differences built into the current system that we cannot ignore. we cannot require those NCAs who formally do not have certain powers to apply those powers. Secondly, again, the broadness of the reporting requirements makes it more challenging to ensure that all NCAs interpret and apply the requirements in the same way when they interact with their issuers. Next slide, please. Then I will speak a little bit about, now I have talked about what the role is of NCAs and of ESMA, and I've made a reference to the current regime, the NFRD. Now, the good news with these challenges I've mentioned is that the CSRD proposal addresses those enforcement challenges that I've been mentioning, which both NCAs and ESMA encounter. So the way that the CSRD proposal does that is it makes a stronger link between the accounting directive, which is the NFRD is in fact a revision of the accounting or an amendment of the accounting directive. So the CSRD makes a stronger link between the accounting directive and the transparency directive. And it also makes it mandatory to publish the non-financial information or the sustainability information, as it should be called, within the management report. So these changes help in more clearly setting out NCA's powers to supervise NFI, which will also facilitate ESMA's work in promoting supervisory convergence across NCAs. Furthermore, the CSRD proposal contains more detailed disclosure requirements, both at level 1, and more importantly, probably, it foresees these reporting standards at level 2. This should also have a positive impact on the ease with which NCAs can enforce the requirements and the possibility that we have at ESMA to make sure that everyone does their work in the same way. And additionally, and I haven't mentioned this in the slide, but the CSRD proposal also foresees that ESMA should publish guidelines on the way that NCAs should supervise sustainability reporting, which is another way that enforcement can become even more convergent in the new CSRD regime. So, of course, we acknowledge that there may also be some challenges with the new regime. For example, because the scope of the CSRD is expected to become significantly broader than that of the NFRD, it's likely that NCAs will have to supervise a much higher number of issuers, which will, of course, demand more resources and perhaps a change in some of the working methods of NCAs. A second point is that, and related point, the CSRD proposal brings many more non-listed issuers into scope. Now, the enforcement powers of NCAs cover over NFI generally come from the Transparency Directive, which of course is focused on listed issuers, not non-listed issuers. And for this reason, presumably under the CSRD, most NCAs will continue focusing their NFI supervision on listed issuers. And similarly, I believe ESMA's focus will remain on listed issuers, as we're also conducting our enforcement work under the scope of the Transparency Directive. And just to make it clear, this is the same way that, the same approach that NCAs and ESMA have under the NFRD, where also already some non-listed issuers are in scope. Now, on this point, it's relevant to mention that there are some NCAs that do have powers in relation to non-listed issuers. And I assume that should continue to be the case under the CSRD. So some NCAs may also look into the NFI or sustainability information of non-listed issuers under the new regime. I think I will leave it here for the time being, so we have time for questions. So happy to take questions and participate in the discussion. Thank you.
Thank you very much, Marie. This is really helpful to really give more of an idea of the important role that the supervisor, be that on the European level or the national level, has to ensuring successful implementation of these requirements. And I'm very glad to hear. I was going to ask you whether you thought the new proposed requirements make your job easier or not. So I'm very happy to hear that they are. We have quite a lot of corporate participants. So I actually wanted to ask you a very perhaps a question that some might be thinking about as they hear about what the supervisor does, but might be a bit too afraid to ask. Certainly a question we hear from companies a lot. Should issuers, should businesses be afraid of the supervisor, or what are your thoughts on that?
I'm sure you can imagine that I will respond with a resounding no. I'm hoping that issuers will see their national competent authority more as a, as someone they can interact with. They can also discuss the disclosure requirements. As I mentioned, and I didn't want to go into excessive detail because the whole enforcement process that NCAs undertake, it is indeed a process. That's the good word. It can be a back and forth series of interactions between the NCA, who contacts the issuer and says, we've been looking into your annual report. We found that your disclosure on human rights was a little bit light. Can you explain how you prepared it and which thoughts went into it and what was your methodology? And, and the issuer will get back, hopefully. And so a dialogue may develop. And so I think that's the case in most cases, that this is a dialogue, and many kind of points of question or can be resolved in this way. And so NCAs are also there, of course, to, especially with new requirements, we can perhaps not call the NFRD new anymore, but it's newer than financial reporting requirements. Especially with new requirements, NCAs can also assist issuers in understanding what is expected of me in relation to these requirements. What should I be disclosing and how? And I think that's one way that we would like to see NCAs. Whether it be with bilateral direct interactions with one issuer, interactions with issuer associations, or by publishing certain information on their website or in other channels, I think NCAs can be a helpful sparring partner in this way.
Thank you very much, and very much. I think it's very encouraging to hear from many. We have very few minutes left. Unfortunately, I didn't want to cut the presentations too short because they were very interesting, but I wanted to address some of the questions, and thank you, Piotr, for also being active in the chat as well. But so quick fire rounds, please, if that's all right, and I'll be strict. One very specific question to Miriam: how does CDP align with the double materiality approach?
Yeah, thank you. That's a very good question. CDP CDP embraces double materiality fully, and we do this by having questions on the both sides of double materiality, right? There are questions on what is the impact of the company on climate change and environment, and what is the impact of climate change, vice versa, on the business, which is then the TCFD aligned part, basically. The other part of the answer is that CDP sets the samples of which companies are requested to disclose to which topic, right? To climate change, forests, water, there will be others to come. By this, we kind of do, and this is a quite intensive, a very sophisticated process where a lot of sort of expertise and latest science goes into. This is kind of the materiality assessment that is done by CDP experts for the companies. So a company that is requested to disclose on water is considered to have material impact on water issues. Ultimately, materiality is a question of audience, right? Who's the audience? What's the time horizon? As well as very sector-specific dependency. So this is also where the sample setting comes in. It's obviously very much depending on the sector of the company, the market size, and then ultimately the presumed impact of the company on environment.
Thank you very much, Miriam. A quick fire question to Piotr. You have answered that question, but it's a question that's near and dear to my heart, so I hope that you don't mind me asking. Obviously, CSRD is involved in a lot of the international efforts, but we're also very keen to make sure that there's healthy collaboration, co-construction wherever possible. And the question came up around reconciling dynamic materiality and double materiality. Could you say a few words? I know you've typed it up in the chat, but I think it'd be good to hear from you around, your thoughts about this.
Yes, thank you. That's indeed a good question. And if we had 2 more hours, then I could elaborate on this. But when we started working on the double materiality conceptual guidelines, which is one of the guidelines that the cluster I'm co-leading is supposed to produce, we quickly found out that the impact materiality is well conceptualized and built into UN guiding principles, into GRI, especially when you look at the new universal standards, etc. And actually, we have worked on this, how to capture it not from the entity level, but from the standard setters perspective. This is the job of the guideline. When we looked on the other side, the financial materiality, we were on an empty field. There was nothing. There was virtually nothing. Of course, financial materiality in financial reporting is a very old concept, and it is well established, and it is very clear, and everybody understands this. But we are looking at financial materiality in sustainability reporting. And when we only want to venture a bit deeper than the simple question, what is interesting to the users of the reports, like analysts, investors, etc. When we want to go deeper and dig into what is actually coming at the company and may provoke some future changes in the cash flows, positive, negative, etc., or changes in the other types of capital, the ones that are not captured by financial reporting, like natural capital, human relationship, intellectual, etc., then we see that it is not conceptualized at all. So we started working on this and I'm absolutely hopeful that very, very soon, I mean in November, you will see a draft working paper on this double materiality guideline, because I need to stop here. I cannot explain all of this because otherwise we would need those 2 additional hours. But it was a very difficult job. I hope we are close to nailing this.
Thank you, and I appreciate all of your hard work at the Project Task Force on this work. Marie, another very quick fire round. I'm sorry. There's a question around greenwashing and making sure that double materiality, results in the right information. Could you sort of give your perspectives from the perspective of a supervisor on this point?
So I think one of the links here could be to link it to the double materiality perspective. And I'm thinking here that a relevant perspective to include could also be the new requirements in the CSRD proposal linked to audit, so third-party verification of information. And I think here there is an interesting step taken to go to the next level in the CSRD proposal, because what is proposed is that there should be a mandatory audit, which is not the case currently, except for checking whether the NFI exists, but not into the content. And what is proposed in the CSRD proposal is that there should be a mandatory audit on not only whether the sustainability reporting exists, but also does the sustainability reporting comply with the reporting standards that are being developed right now, and also the process that was carried out by the company, by the issuer, to identify the information that they have disclosed, has that been compliant with the expectations? So I think looking a little bit behind the veil, looking into the black box of how does the issuer prepare its information, this might be an important contribution or a contributory factor to this fight against greenwashing. I think that's the quickest answer I could provide to that question.
Very good answer, and thank you very much. And dear viewers, give me the last 2 minutes. I promise you I will let you go on time. Very quickly, I wanted to, just to wrap up things, first and foremost, I wanted to thank our speakers, Miriam, Piotr, and Maria, Note of Experience. One thing I want to highlight is the new EU Environmental Reporting Handbook that we published also in partnership with CDP, which is a refresh of our older handbook. Really great examples of what companies are doing in the real world to comply with the non-financial reporting directive that is still in force for now. So please do have a look at cdsb.net/NFR handbook, and hopefully it's a helpful resource for you. Thank you all once again for your time. Thank you for the wonderful panelists. I wish we could have had that 2-hour discussion to talk about everything else, but hopefully we can continue the conversation. Last point, we have a continued discussion focused more on corporates tomorrow. So if you haven't signed up yet, go to cdsb.net/events and please do sign up. Thank you all and have a great rest of your day.
Thank you. Bye.
Thank you very much. Bye.